If you are new to this particular channel, please let me just explain what we're about here. We try to analyze Tesla stock, okay? Lots of people try to analyze Tesla stock. Some people do it with the technicals. They look at the charts and all that kind of stuff, all that woo-woo, and some of it I tend to agree with, especially because it's self-fulfilling. And then other people will take a look at the fundamentals and they'll give you all kinds of information about what's happening on a daily basis with Tesla, all the news that's fit to print and some that isn't. And then there's other folks, who just kind of give you an overview of how things are going and give their opinions. Well, okay, on this channel, what we try to do, we believe that there are four components to analyzing Tesla stock. Number one is, of course, the fundamentals. Of course, we want to talk to you about the fundamentals of what's happening on a daily basis. And I plow through everything that I can find. And then I have amazing guests on who are experts in specific areas. And between us, we all try to zero in on exactly what's happening on a daily basis with Tesla, with Elon, even with his other companies. To keep you up to date with that entire thing. Then, secondarily, I look at the entire economy. And we're going to take a look at that today. We're going to have a little bit of Tesla news here at the beginning, but then we're going to dig into what's happening in the economy right now because it's really different. It's very unique. We've never been in an economy like this. There'll never be another one like it again. It's going to be crazy for the next 2 or 3 years. So we're going to dig into that this morning. Then we look at the overall macro of the stock market itself. Where is it? How's it going? Where's it going? We love Tom Lee for that. We have, again, good guests on that help us a tremendous amount with where the overall market is going. And we try to gauge that because guess what? Where the overall market is going, it impacts Tesla stock as well. And then finally, we do look at some kind of the daily movements of the stock. We look at what we think is moving the stock. We look at where the catalysts are that we think are going to move it in the future. We try to give you some estimates from time to time. This week, I've been almost giving you daily estimates, weekly estimates of where I think the stock is going to go. I don't always do that because I always don't think I have a clue. Except I have a clue, but I don't not going to. But this particular time, it was pretty obvious to me. So I've been giving you some very, very tight estimates. And so far, Brian Wong, who's been kind of my partner on that, we've been fairly consistently right. It doesn't mean we're going to do that well next week. Who knows? We could blow it completely. And then we definitely, Brian and I, again, almost as a team, have been giving you estimates, price targets for the future out 3 months, 6 months, a year, even 2 years. And I'm pretty confident that we're going to be right on those estimates. Where right now we're talking about 750 by the end of the year, unless there's a very strong rollout of the robotaxi. That's like over 500 vehicles, no safety riders, and there's plenty of cars on the road, plenty of new cities added, and plenty of customers being invited to go on rides. So in other words, a real business. If it's a real business, a significant business, we could be looking at 1,000 by the end of the year, or certainly by the end of January. All right, so those are the things that we do on this channel, and today we're going to do two of those. We're going to give you some Tesla news, which is pretty fascinating, by the way, and then I'm going to get into some of the overall general business news, which is, to me, almost more fascinating right now because it's really, really unique and different, and people need to pay attention. All right, so let's talk about this first article. BYD, apparently, this is from Teslarati. BYD is seeing a lot of momentum in Europe, so much so that the mainstream media has taken every opportunity to argue that the Chinese automaker has beaten Tesla in the region. Well, actually, their sales are not as large as Tesla's in Europe, but they did have a very, very good year. But while BYD's sales this year in Europe are rising and Tesla's registrations remain challenged, the raw capabilities of vehicles like the Model Y are difficult to deny. And this was highlighted in a 500-mile challenge by What Car? Magazine. That's the name of the magazine, What Car, which showed that the new Tesla Model Y is more efficient, cheaper to run, and more reliable than rivals like the BYD Sea Lion, and even the nearly 400 kilowatt charging 𝐒𝐚𝐲 IM6, which is certainly not a BYD vehicle. But the MG is very popular in Europe. The range and charging promises on paper, the BYD Stallion 7 and MG IM6 promise standout capabilities against the Model Y. The Sea Lion 7 had more estimated range, and the IM6 promised significantly faster charging. But when faced with real-world conditions, whoops, it's still the Model Y that proved superior. During the 500-mile test, the BYD nearly failed to reach a charging stop, arriving with less range than the display projected, as noted in the Car Up report. MG fared better, but its charging speeds never reached its promised nearly 400 kilowatt charging speed. Tesla's Model Y, by comparison, managed energy calculations precisely and arrived at each stop without issue. Tesla leads in areas that matter. Charging times from 25 to 80%, from 25% to 80% showed that the MG was the fastest at 17 minutes, while Tesla and BYD were close at 28, 29 minutes. Overall efficiency and cost told a different story, however. The Model Y consumed 19.4 kilowatts per 100 kilometers compared to 22.2 and 23.9 for BYD. Over the full trip, Tesla's charging cost totaled just 82 pounds, thanks to its supercharger network, far below the 130 pounds and 119, respectively, for BYD and MG. What Car magazine's testers concluded that despite BYD's rapid sales growth and MG's IM6's serious impressive charging speeds, Tesla remained the more compelling real-world choice. The Model Y just offers stability, efficiency, and improving charging infrastructure through its supercharging network. And as for the magazine's host, the Model Y is even the cheapest car to own among the three that were tested. By the way, did I tell you this is Randy Kirk? And there's things you need to do. Remember those things, including Patreon. I know you're not going to do Patreon until I give you a free book. It's happening. It's happening. We're probably about 2 weeks away at the most from the free book offer. All right. Seth Golden has this. The gains in aggregate consumption also obscure the sharp divide among American consumers and the growing reliance on top earners. So we have gains in aggregate consumption, but there is a big divide still between top earners and the lower folks. Moody's recently estimated that the bottom 80% of earners have merely spent in line with inflation since the pandemic, while the top 20% are driving the growth end of the curve. As long as they keep spending, as long as those top enders keep spending, the economy should avoid recession. But if it turns more cautious, for whatever reason, the economy has a big problem, according to Moody's. Well, okay. By the way, I did, for some of you going, didn't you do that little story last night? Yes, I did, but it sets up this story as well. The GDP, the Atlanta GDP estimator, the GDP Now model, estimate for real GDP growth in the third quarter, this is right now, we're almost at the end of the third quarter, they just raised it to 3.9%. And that was up from 3.3% just last week, a week ago. After recent releases from various different agencies, they raised it up. And they said that this was due to the fact that people are consuming more than they expected and that companies are investing more than they expected. And this is going to be a story, okay? This is going to be the story going forward. The investment side of this thing is going to be huge, massive, never before anything like it. What they don't talk about in that particular article is productivity. Anyway, but let's just keep going. Wall Street Journal. Now, the country's largest employer is making plans to confront the reality. Walmart, the country's largest provider, is looking at the AI situation and deciding what exactly are we going to do here. It's very clear, according to Chief Executive Doug McKillon, it's very clear that AI is going to change literally every single, he doesn't say single, every job. And this week is one of the most pointed assessments to date from a big company CEO on this subject. Now, up to now, what you've heard, this is Randy talking, up to now, what you've heard is that, AI is not going to take away any jobs. And then you've had a few people saying AI is going to crush, just destroy jobs. What are people going to do? You got these two ends of the puzzle. Some of those people are trying to really send a warning, but I think they're being hyperbolic. Other people are trying to get, calm down, calm down. We don't want people running through the streets with pitchforks quite yet. His remarks reflect a rapid shift from just a month ago in how business leaders handle the potential human cost of technology, of the AI technology. Companies including Ford, JP Morgan Chase, and Amazon have bluntly predicted job losses associated with AI. Some have advised other employees to prepare their workforces for change. Employers to prepare their workforce for change. Some jobs and tasks at the retail juggernaut will be eliminated, but others will be created, McMillan said this week at the Walmart's Bentonville headquarters during a workforce conference with executives from other companies. Maybe, quote, maybe there's a job in the world that AI won't change, but I haven't thought of it, he says. Inside Walmart, top executives have started to examine AI's implications for its workforce in nearly every high-level planning meeting. It's the top subject. It's coming up in every meeting. Company leaders say they are tracking which type of jobs decrease, which type increase, and then they want to stay, and which ones will stay steady so they can gauge where they need to do additional training and prep for their workers. And of course, big companies, this is what they're going to do. When I say big companies, probably even companies with, say, a couple of hundred employees or more are going to, maybe even 100 employees or more, are going to really look at how they're going to be able to retrain their existing employees. That's always going to be the smartest thing to do. Our goal is to create the opportunity for everyone to make it on the other side, McMillan said. I was just being a little bit unfair. I have run companies and consulted with companies, literally hundreds of companies, by the way, 400 companies over the last 18 years, from everything from one employee, the owner, to that 25 or 50 employees, and then my own company had 100 employees. And I would say even the smallest companies are, most owners that I know like their employees. I mean, truly, truly like their employees. They look at his family. Even when you have when I had 100 employees, I definitely looked at it as family. I don't know what it'd be like at 250. Haven't worked in that environment, haven't been in that environment, but I think to a great extent, most owners are trying to hold on to employees because they like them or because it's just easier to hold on to folks than to hire and train. For now, Walmart executives say the transformation means the size of its global workforce will stay roughly flat even as revenue climbs. I am hearing this over and over and over and over again. I listen to dozens of, literally probably 4 or 5 hour-long plus podcasts a week from things like BG2 and the All In podcasts and others. And this is the theme. We're going to grow. Our company's going to grow, but we're not going to be adding bodies. Walmart plans to maintain its headcount of around 2.1 million global workers over the next 3 years, but the mix of those jobs will change significantly, said Donna Morris, Walmart's chief people officer. What the composition will look like remains murky. We're not exactly sure how those jobs are going to change. We've got to do our homework, and so we don't. But right now, we don't have the answers. Already, Walmart has built chatbots, which it calls agents for customers, suppliers, and workers. This is a big deal. The agentic part of this is I'm yet to see the agent side myself in my daily work, but believe me, my daily work has changed completely in terms of how I get everything that I need to do what I do. It's also tracking an expanding share of its supply chain and product trends with AI. So it's looking at the supply chain too. In July, Walmart hired an executive from Instacart, Daniel Danker, to oversee these ambitions. Danker reports to McMillan. Part of his role includes working with Morris to determine how Walmart's workforce should shift. Some changes are already rippling across the workforce. In recent years, Walmart has automated many of its warehouses with the help of AI-related technology, triggering some job cuts, executives said. You've seen these little robots that run, these little round robots that carry things around the warehouse. And there's other kinds of automation. Now there's no change. This is not new. This is where people get confused. 50 years ago, 100 years ago, companies were adding automation. 125 years ago, the turn of the 19th to the 20th century, lots and lots of companies were putting in automation By the way, it's not even automation isn't even that. Even, we had automation before that. Okay, you can you, plows are automation. Okay, compared to taking your hands and plowing the earth with your hands. You get a shovel, that's automation, and then a plow is automation from there. Humans are trying to leverage their capabilities, make themselves superhuman, and that's been going on since the invention of fire. But so these are changes that are normal. Putting in some kind of automation to move boxes around may seem all science fiction-y, but it's not. It might uh, 10 years ago, it would have been putting it on a set of rollers and rolling it along, or a conveyor belt and conveying it along. Now it's just automated bots on the floor that are carrying those boxes instead. But it's more efficient and it's more effective, and it's continuing. Now, new roles have been established too. Walmart, for example, created an agent builder position last month, an employee who builds AI tools to help merchants. It expects to add people in areas like home delivery or in high-touch customer positions such as its bakeries. The company has also added more in-store maintenance technicians and truck drivers in recent years. All across the industry, the pace of change will be gradual, says McMillan. For example, customer service tasks in call centers and through online chat functions will become more AI dependent soon, but other tasks will not. And this is everywhere you see this. I can tell you that I truly believe, I've said it before, 20 years from now, you'll be able to go into an industrial park, and there's industrial parks all over the country. These little industrial parks, you pull up your garage door and you've got 1,700 square feet or whatever of space in there to do some kind of manufacturing, some kind of assembly, or just to import and open boxes and then send them out. These locations are going to look almost exactly the same 20 years from now. And they'll have some AI stuff going on, but it won't change it much. Take humanoid robot workers. Companies have recently pitched robot workers to Walmart, McMillan said on stage. Yet until we are serving humanoid robots and they have the ability to spend money, we're going to keep serving people, he said. We're going to put people in front of people. Yeah, give me a break. When the humanoids do what we know, that if you're watching this channel, you know what these humanoids are going to be capable of. Walmart's going to be buying tens of thousands of humanoid robots, or they will be out of business, because Costco will be, and Safeway will be, and Kroger will be. Anyway, elsewhere in the corporate world, top executives are pushing their companies to wholeheartedly embrace AI. And quickly, some have created internal heat maps to decipher which roles or tasks could be automated by AI. Others have pushed staffers to propose new projects for AI. At an agricultural company called Syngenta, for example, the company has identified lighthouse projects in areas like research and development and supply chain functions that are ripe for AI overhaul. Okay, so Elon Musk this morning was saying that one of the things that we're going to see is he says he believes that XAI will be creating new physics by next year. It will be coming up with it will be originating ideas. It will be changing the way things are done through patented capabilities. In other words, real science and real origination, as opposed to just scooping up the best of what's out there and doing things by analogy. It will actually start to invent things. He said this Jeff Rowe says the idea is to spotlight new approaches and identify emerging leaders who are best equipped to embrace technology. AI is starting to ripple through the job market, says Ronnie Chatterjee, OpenAI's chief economist at the Bentonville conference. I think 18 to 36 months, you're going to see a lot more impact. Earlier this month, OpenAI unveiled a partnership with Walmart and other companies to design AI training certification programs. This is going to be huge. But again, what is he saying? 18 to 36 months? What he's talking about is 18 to 36 months. Productivity is going to be going through the roof. I thought it would happen sooner. I think it's happening now. I mean, I know it's happening now. I've talked to way too many people and listened to way too many podcasts of companies that are making the change now, and the productivity is immense. The drumbeat of warnings about AI-related job cuts has increased in recent months. Accenture CEO Julie Sweet told investors Thursday the firm is exiting employees, firing, laying off employees who can't be retrained. So if you can't be retrained, if you are stubborn and you're like, oh, I don't know how to do that, you're going to be out of there. And if you're looking for a job now and you're one of these graduating seniors from college that's like, I can't find a job. Well, it's because you're not putting that you're AI capable on your resume. You better be becoming AI capable. It's so easy to just do it yourself. Meanwhile, we'll continue to hire people who are generative AI fluent, and retain existing workers to serve clients in consulting and other divisions. Artificial intelligence is going to replace literally half of the white-collar workers in the U.S., Ford Motor Chief Executive Jim Farley said this summer. Going to replace nearly half, literally half, of white-collar workers in the U.S. Now, again, that might be slow enough that it doesn't look like people being laid off. It looks more like nobody being hired. But that's important. And that's why what President Trump is doing right now is so brilliant and or just lucky. By reducing the number of immigrants right now, it helps to salve this problem. At the Bentonville Confab, executives from Bank of America, Blackstone, and other employers sought to emphasize that with the right training opportunities, employees could weather the AI storm. Essential human qualities like the ability to connect with others and develop meaningful relationships would become even more important, they said. Yeah, that'll become super important because guess what? The AI sometimes is way better than you at developing those relationships. Better bedside manner, as has been pointed out many times. There's nothing soft about soft skills. No, they're absolutely right. Learn how to sell, learn how to manage others, learn how to be very, very good at consulting. Said Courtney Della Cava, Senior Managing Director of Global Head of Portfolio Talent and Organizational Performance. Find a way to have a short title. It's going to help. The private equity firm said it has found an ability to withstand change and evolve is a key quality. It has found that the ability to withstand change and evolve is not exactly withstand change, to change. Not withstand change, to change and evolve is what it should have said. Resilience is the number one predictor of success. I think the history of technology innovation, she says, is the people have reskilled, found gainful employment in other aspects of the economy. Do you know that there's going to be waiters for like ever? If your young person has just graduated from college and they can't find a job, tell them to go get a job waiting tables. This is a category that has been hurt, or the availability of waiters has been impacted by the immigrants going home, and it will continue to be impacted by that. By the way, chefs, cooks get paid quite well in some restaurants. That's another category that people can do quite well in. 𝐒𝐦𝐚𝐲, CEO of a roughly 115-person AI company that focuses on healthcare, recently told employees they need to think of the current moment in almost Darwinian terms. Those who fail to evolve, learn new skills, and create higher value roles for themselves might be, will be left behind. I'm telling you guys, you're going to stay here, but you need to be the change agent. You need to evolve yourself. You're smart enough to work here, but you're going to do the same job. You're not going to do the same job in 2 years. Embrace the moment. All right. Well, we're going to talk more about this stuff tonight in the 2 shows coming up. We got the regular Monday morning show, which is held on Sunday night, where we talk about the upcoming week. Guess what this week is? Oh, yeah. After I just spent this time talking about jobs. Okay, this is Jobs Week. And so we got all kinds of jobs information, the JOLTS and the, anyway, I'll be talking to you about all that tonight, as well as some more information on the general economy from a Fortune magazine article that I found compelling. And then we'll have some kind of a show late tonight at 7:45. I'm not sure what that show will be because I haven't thought about it. I haven't thought of it yet. I need to think it up. I need to ask Rock what that show will be. Not quite. It hasn't come to that yet, but it might. All right. Last night, actually all day yesterday, 3 absolutely stunningly good shows that you watched, sorta. So it's Serb Basher in the morning. We had a program that I did in the afternoon, and then a Brian Wong show last night. I'm going to put all 3 cards up because maybe you've got some time today before the game starts, or maybe you're not going to watch the games and you're like, oh, yeah, I got time to listen to something. Well, believe me, every one of those was kind of like what I just did. It may not have been super, super specific to Tesla, but it was very specific. It was very, very generally specific to Tesla. It all impacts the company and the stock. You got to stay ahead of all this stuff. That's why I do this channel the way I do it, which is very, very, very different than anybody else. All right, so I'll put all three of those cards up. We'll look forward to seeing you a couple more times a day. And for now, it has been great talking to you.